since gold is the hot topic, we have to also talk about the next big commodity, which has been the biggest discussion point, biggest talking point this week, which has been the crude oil prices. To discuss this and more, we have Vikas Halan, Senior Vice President, Corporate Finance Group at Moody's, join us to share with us his view on the crude oil and the kind of moves that it has seen this week. Vikas, hi and welcome on board. What's your assessment of the present supply situation? Because clearly there has been a bit of a tightening which has caused the oil prices to rally a fair bit this week.
On the supply side, clearly one thing to look out for is the Venezuelan production, which is what has propped up the prices in the recent weeks. There has been decline in production from Venezuela because of some of the infrastructure bottlenecks and power interruptions and so forth. There is, a political crisis in Venezuela for a long time, but this is resulting in production cuts in there. The other side of the equation is the American shale production, where you are seeing production touching close to 12 million barrels per day in February, and there is going to be, over the medium term, 6 to 9 months, we expect that to continue to increase with the U.S. supply bottlenecks being sort of ironed out with infrastructure development, pipeline construction. So that's going to happen in second half of 2019, which is going to add additional bit of supply.
Okay, like you just flagged off, the U.S. Continues to have a hard stance on Iran. It plans to impose additional sanctions on the country as well. The tense situation in Venezuela also continues to persist. Along with this, of course, there are concerns about global economic growth. How are you reading into the overall trend for crude oil prices amid all of these concerns? What could be the impact on demand, and which way do you think the prices are headed?
So the global economic growth doesn't really affect the supply as much directly as it affects the demand. And what we saw in the run-up to last year and last quarter, and also in the first quarter this year, the headlines were dominated by the US-China trade discussions. There has been, positive comments from both sides, more particularly from the United States, talking about a possible trade deal, which has sort of brought in the emerging markets back into the investors' comfort zone. And that has resulted in prices of most commodities going back up again. So there is a positive or a more sanguine outlook on the demand for most of the commodities if the trade deal actually happens. So the economic growth has not been revised by any of the major, global economists, but we expect if the trade deal actually is reached, we might see an economic growth revision, and that could have an impact on the expectation of demand growth for oil.
Okay, could you, give us your view on the price that you see crude taking this time around, given your expectation of a higher demand?
We continue to expect 50 to 70, as I said, and more specifically, if you want to have an average for the year, it's about 65 that we use. And the crude oil prices currently on Brent is about 69. But if you look at the average year to date, it's about 63, 64. So we are focused more on the average, and if we take 65 and the current average is 63, we expect a little bit of upturn in the oil prices, not significantly higher from where we are, possibly staying at these levels. So, as a rating agency, we tend to be more conservative when taking views on prices, and therefore, our view is we need the ratings to be comfortable at the current prices or maybe even lower prices. So we are more focused on the downside from here, and the downside that I see on the oil prices could come from another round of waivers on Iran, or possibly a no deal or less compliance of OPEC production cuts, or return of the Venezuelan production, and so forth. There could be further downside from a surprise no deal between US and China, which could have a negative impact on the demand. So these are the downside risks we are more focused on rather than taking a view on the prices as such.
You know, Vikas, Donald Trump continued to ask for greater production cuts by OPEC to curb prices. Does it seem likely that OPEC would comply to that request?
OPEC would not like to have prices at a very high level. I don't think their target is to increase prices. If they're looking to balance the market, I think the impact on the prices is not going to be very significant. The price of $70 crude oil, I think, is already sufficiently stimulative for production in North American shale. So they would not want these prices to be significantly higher than where it is today. If prices go higher than that, the 70 or dollar Brent, we might actually see a less than optimum market balance. I don't think that is what OPEC has communicated. So I would not say that there would be a price increase because of OPEC production cuts. There could be price increase in oil because of factors that are outside of OPEC's control, including any geopolitical events.
Now, going by your overall viewpoint, would it be correct to say that your outlook for crude oil is bullish?
As I said, our outlook for the crude is to look at what are the downside risks at the moment, and the downside risk I outlined. At the moment, they seem a little bit far-fetched. There is also one thing to keep in mind is the second half of 2019, we would see increase in supply from the US after they manage their bottlenecks. The other interesting thing to look at is the difference between WTI and Brent. Now, WTI and Brent difference is hovering close to $7-8. It used to be much narrower than that. And we expect by the end 2019, we would see them narrowing back again, so closer to $4-4.5 rather than $7.5. So even if the price overall increases, we would see the band between the two narrowing. So you may not get Brent increasing so much as we might see WTI increasing. So you might see overall increase, but it may not be passed on to the customers in Asia because the prices in WTI might increase.
Okay, Vikas, thank you so much for joining us. Really appreciate your viewpoints on the entire, factors which have led to the rally in crude prices and your outlook ahead.